Boom, we're back. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn. Focus Compounding. If this is the first time that you're tuning with me, hit the subscribe button, thumbs this video up, follow me on Twitter. Oh, did I also mention that we have the #1 value investing podcast in the world? Make sure you check that out as well. In today's video, we are going to be going through how to get the most out of an annual report. Geoff and I get questions all the time on how should I read the annual report? Do you print it out? Should I read the whole thing? How many years of it do you read? Let's go through it. So today I tweeted out a great file that was not actually made up by me, but actually inspired this video. So if you follow me on Twitter, you could get it. But it's all about navigating a 10K. It's a pretty long document that was incredibly thorough. So make sure you take a look at that if you want to get access to it. But as I said, that is a very common question we get on the 10K and an annual report and how they should go about reading it. So I will just lay it all out right now. Yes, we print all the annual reports. Yes, we read page by page. Yes, we typically read almost every single year. Now, if it's a business that's been around for a very long time, we may read the first annual report that they put out and then one of the most recent ones. We do look over all the numbers. If you go to quickfs.net, no affiliation to us, you could actually pull all the numbers, and if anything looks kind of funky in there, we'll go back to that year to see what was going on. So I would say we definitely always read the first annual report and the last annual report, and then in between really depends on what's going on within the business at the time based from the numbers. I think a lot of people complicate it. I think an annual report is something that, for the most part, it's written by lawyers, for lawyers, but as soon as you read a bunch of them, you'll really start to pick up on stuff and breeze through it. Another thing that we do, which we've talked about a lot, is whenever you are studying a company and you read an annual report, a good thing to do to really familiarize yourself on the industry and just the other businesses in general is to read about 3 or 4 other companies' annual reports that are competitors to the business. And upon doing that, you'll really get a good feel for who's the best business in the industry and why, and you'll just get a better picture of the whole industry in general. So we can talk about Warren Buffett's checklist. It could pretty much be boiled down to 6 things. 1, is it a simple business? 2, does it have favorable long-term prospects? 3, does it have able and honest management? 4, does it have consistent earnings? 5, does it have a good return on equity? 6, does it have little to no debt? And 7, is it currently trading at an attractive price? Those are really the 7 things that you want to be thinking through. Write all of those down, have them next to your annual report when you're reading, and really try to think through those 7 points. An annual report is not something that you just casually or aimlessly read. It's something that is definitely more of an active reading. I think a lot of people would do better if they have a lot of questions that they bring into an annual report. When you're thinking through different types of questions for the business, the 2 most important things that you should really care about is A, is it important? And B, is it knowable? If it's important but it's not knowable, forget about it, put it in the too hard pile, move on to the next company. But if it's important and knowable, well, great, let's continue to do due diligence. What's interesting, if you study a lot of Warren Buffett's past investments, there's a ton of books on them, and then of course you can find a lot of case studies on the internet as well. They usually boil down to a few key variables. For example, Coca-Cola, there was rising per capita Coca-Cola consumption in foreign countries. Buffalo Evening News, he has long talked about how they had high penetration rate and they were basically a duopoly that he thought could become a monopoly. See's Candies, very popular investment. I love See's Candies. It was the pricing power. Geico, one of his most popular investments. It was a low-cost operator, and he felt like the market was big enough for years of growth. And then of course, when he talks about Apple, he always talks about how ingrained it is within our culture. I think the most important part of this video is that an attractive price is the last item on the list, because again, you don't want to confuse a cheap stock with a great company. So I think if you study the businesses first, you build a watch list of companies that you love and you would love to own at a future price, what that allows you to do is it allows you to not confuse a cheap stock with a margin of safety. Focus on the business first, it being a great business that you'd like to own in the future, and then wait for the market to give you a price that's cheap. Every great investor I know does this. Next thing, when you are reading an annual report, take notes, close Twitter, put all technology away. You should have a pen, a highlighter, a calculator, and something to take notes. Geoff, for example, he uses a calculator that I think he's used since high school, and he says he really does that because it allows him to focus. You should be thinking through a bunch of different questions, almost like an investigative journalist when you are studying an annual report. And then the last thing I think that you could really try to learn from an annual report that's very important is try to, and Geoff has spoken a lot about this before, try to figure out how the company views themselves. When we were going through and reading the Lehman Brothers annual report the other day on that past YouTube video, it was very obvious that Lehman Brothers, they did not view themselves as a very levered, incredibly risky institution. And we all know with hindsight, you know, what happened to that situation. But from the MD&A section of the annual reports or the 10Ks, you could really start to pick pick up on how the company views themselves, which metrics they think are important. If they're talking about community adjusted EBITDA, you probably, want to be very wary of that. But if they're talking about free cash flow and growth in intrinsic value, that's probably a company that you want to follow. I think growing as an investor is really a journey and it's not a sprint. It's something that you only get better as you age. Warren Buffett at 89 is a way better investor than he was even at 85, at 80, at 75, at 70, which is pretty cool about investing. So it's something that is always changing, you're always growing with, and I think the only way to get better is to just get started. So put away all the financial theory textbooks, put away all the valuation books. Your valuation should be a very simple part of the process. If you read an investor pitch, the best pitches are when the pitch is about 8 pages all on the business and why it's a good business, and then the last paragraph is why it's cheap. So really focus on trying to implement these things into your process. And again, if you can't answer the first 7 questions, just put it into a hard pile and go on to the next business. There are thousands of public companies out there. You do not need to know every single thing about every single company, and you only need a couple investments in your life that are meaningful to make the difference. I want to thank everybody so much for tuning in with me. If this is the first time that you are checking in, we are pumping out a ton of content. Be sure to check out my Twitter. Be sure to check out our podcast, over 190 different episodes, having a lot of fun doing it, my partner and myself. We write about investing at focuscompounding.com. I tweet a lot about investing at Focused Compound on Twitter. And then, of course, we talk about a ton of different ideas on the Focused Compounding podcast. Hit that subscribe button, thumbs this video up. Be sure to leave a comment down below. It's not about the content that I want to create for myself. I'm creating this content for you guys. So if there's anything that you would like me to go over, definitely leave a comment. I want to thank everybody so much for tuning in with me here today, and I will see you in the next video.